Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. It's a great day for India as we become the first country to land and deploy a rover on the south pole of the moon. We extend our congratulations to ISRO for achieving such a remarkable feat. For the markets yesterday, what was not remarkable was the flash PMIs from Europe and UK coming in below expectations and causing fresh weakness in both euro and pound. For the rupee, the day was better after it broke some major supports and closed near 82.68. Good morning, JK. Keen to hear your thoughts on the market given what's going on.
Good morning, Swaraj. First of all, acknowledging a proud and historic achievement for the nation yesterday. And congratulations to all the experts and scientists for this commendable achievement. India, which is already ranking highest in terms of growth in the world, has again come in the top four of the world in the field of science and astronomical world, making everyone in the world take note. Now, in a coincidence, even the market was celebrating the rupee's performance yesterday, as we saw almost a 50 paisa drop in the USD against the INR. The move was quite unexpected because it happened amid an environment of a strong dollar, even that stayed close to a multi-year low, and more than anything, the market was looking for an eventual up move and positioned accordingly. But while the selling did happen with the small IPO-related flows, breakthrough 80 to 90 was a massive action of positional unloading and stop losses. And going by the reports that Reuters published, the central bank had directed banks to stop taking fresh arbitrage positions, possibly intended to avoid speculative pressure on the rupee. And that led banks to unwinding their long positions and dragging more players, particularly the exporters, to come and sell. And the break of 80 to 80 was not expected, but that really sent everyone bailing out of their long positions. And of course, as they say, when it rains, it pours. And it was good news as galore for the rupee, as oil also dropped for a fourth day. And as the Biden administration is reportedly in talks with Venezuela to explore a temporary lifting of sanctions that have hindered its oil sales. And that comes on top of a surge in exports from Iran this month, and Brent trades at 82 after trading almost at 88 earlier. Now, where do we go from here? From near term, the upside gets limited to 80 to 70, 80 level that, as the flows that have been held back get sold, and a clear break of 80 to 50 can yield 80 to 20, a probability that I will not rule out. However, the dollar does continue to look stronger and set to gain more in the coming days due to relative strength of the US economy and the high yields attracting, notwithstanding an underwhelming PMI report from US yesterday, where the services sector also showed a drop. But in my view, of course, Powell will use the Jackson Hole speech to reiterate the continued fight against inflation and indicate keeping rates higher for longer. And though the markets are prepared for it, weakness in activity levels in regions like UK and Europe seen yesterday should be of a big concern. We had services PMIs in these regions, particularly in Germany, drop into big time into contraction territory. And while manufacturing contraction has been well known for quite some time, services contracting has been a very negative surprise. And this has set the market starting to bet on a pause by ECB in September, and pairing of bets on UK MPC raising rates beyond 5.75%. The news on Europe was worse as the prices paid rose even as the activity levels dropped and entrenched stagflationary expectation. And Germany, the largest economy, posted the worst slowdown, of course. Now, while all the attention is focused on Powell's speech on Friday, actually Lagarde's speech could end up being more of a market mover, because the Eurozone services sector has further complicated the rates picture for ECB, and Lagarde may just take the opportunity to fine-tune her guidance on the rates. In contrast, it was the preliminary data from Japan alone, which surprised to the upside on the PMI, slightly increasing from 49.6 to 49.7. But as usually is the case, Japanese yen does not, stop surprising the market by remaining weak in the face of all the good news and all the negative news from others. And it really is, a conundrum that, yen remains so weak, despite a fall in the yields also yesterday. maybe it's time that when Bank of Japan steps in and brings in a sense of reality to the market as well. Like we have a global economy which is in recession in many segments now, and evidence of big slowdown in trades is visible, and then now we have the manufacturing and services PMI. So while we have been looking at inverted curves and looking at when the recession sets in, but we are already seeing set in some sectors of the global economy. So will the rupee sustain these major gains? But going by the policy of the central bank to keep it in stable range, I doubt we may not get more than 82.40 or maximum 82.20, and we might once again see the central bank jawboning the market higher eventually and keeping it in a stable range. Finally, the equity market had a lot to cheer when in the AI and tech major NVIDIA announced the forecast of third quarter revenue well above analyst forecast. It has risen more than 8% post-market hours, and they also announced a massive share buyback program of $25 billion. So we had a rise in the MSCI all country index by almost 1%, and all the indices in the US also rose. And as was to be expected after the underwhelming PMI reports across regions, the yields have fallen by 12 to 15 basis points in the long tenor, and that has given a good support to the EM currencies, which have rallied quite a bit. And just to conclude, on one underwhelming news from US, the Bureau of Labor Statistics is set to revise its past job reports. And typically, every month of the fresh payroll data, agency looks back at the 2 previous months and edits its database accordingly. But there is a report that says possibly going to be a 500,000 reduction in the jobs created in the US in the year through March, which means about 40,000 less jobs per month in the 12-month period, putting all the previous assessment of the jobs market into some sort of a reassessment. So that's it for today, and we look forward to probably a lesser volatile day today as market readjusts to the levels in the INR, and also look forward to the Jackson Hole Summit tomorrow. Thank you.
Thank you, JK. And I really like what you said. Markets were celebrating not just the Chandrayaan's rover landing, but even rupee's performance yesterday. Quite unexpected move given how dollar has remained strong, as well as yuan trading near its lows. So break of 82.80 led to some unwinding of long positions, leading to appreciation in rupee. Even oil prices have helped because they have been declining. However, dollar looks strong given the relative strength of the economy. Services PMI in Germany fell big time into contractionary territory yesterday, which was a negative surprise. Now markets are betting on a pause by the ECB in September. So Lagarde's speech can be a market mover rather than Powell's speech, given what's happening with the Eurozone. That's it from us today. We'll keep following these updates and keep you updated. Tune in tomorrow with another round of fresh updates. Thanks for listening.